Can you grow a dividend portfolio from $100 in dividends to $1,000 in cash flow every single month? Hey Bowtie Nation, Joseph Hogue here with a new challenge, growing a dividend portfolio to $1,000 in monthly dividends. Building that kind of cash flow isn't easy, but the Dividend Aristocrats could be the perfect stocks to do it. I'll show you how and highlight 5 dividend stocks to get you started. I'll explain the Dividend Aristocrats later, what they are, and why they make for the best stocks to grow your dividend portfolio, but we're going to start with 5 stocks, some of the highest dividend yields in the Aristocrats list. I'll detail how much to invest in each stock to start off with $100 in dividends every month, then how much to invest regularly to grow your portfolio to $1,000 in monthly dividends. And let's get started with Northwest Natural Holdings, ticker NWN, with its 5.5% dividend yield, actually the lowest dividend in the group. Northwest has over 165 years as a regulated utility, serving more than 2 million customers in Oregon and Washington through natural gas, renewables, and water. I love the business model here because it's got that regulated monopoly for that safe cash flow, plus the upside in incremental earnings on renewables and that gas pipeline asset. Like most dividend stocks, it's not going to make you rich overnight, but this is long-term stability and cash flow with targeted earnings growth of 4 to 6% a year and consistent dividends. In fact, the company has grown the dividend for 68 straight years, not only making it a dividend aristocrat, but also a dividend king. You can see in the dividend history that growth has been about 2.7% over the past 5 years, but with consistent earnings growth, it could pick up over the next few. Starting us off with $100 in dividends each month from our 5 stocks, the plan is to buy 46 shares, which would yield you about $96 a year in dividends, or about $8 a month. But remember, the idea here is going to be to reinvest those dividends, so we grow that portfolio and the cash flow. As the smallest yield of the 5, it's only about 10% of the portfolio, so we're not focusing quite so much here. We're just getting started here, but I want to explain why the Dividend Aristocrats are the perfect way to build this dividend portfolio. The Aristocrats are the stocks in the S&P 500 index that not only pay a dividend, but have increased their payouts for at least 25 consecutive years. I like using the ProShares S&P Aristocrats ETF, ticker NOBL, here as an example because it invests directly in those stocks. The fund adjusts each year, adding any new stock that makes the list and dropping those that couldn't make the cut. It's got some great companies here like Clorox, Walmart, and Kimberly-Clark. The group pays a 2% dividend yield, which may not seem that great, but is 53% higher than the broader market average, with solid price appreciation and is surprisingly well diversified across sectors. You can see in the chart here, it's a little heavily weighted to consumer staples and industrials, but then has a solid mix in the other sectors of the economy as well. And investors in the Aristocrats have done very well. This chart of the Dividend Aristocrats fund shows it keeping up just with the stocks in the S&P 500, that broader market index, and underperforming a little bit recently, but that price chart doesn't account for dividends. The 8.6% annualized price return on the Aristocrats actually becomes a market-beating 10.9% annual return when you include those dividends over the past 9 years. And why I like the Dividend Aristocrats for this kind of dividend income portfolio is these are the companies you can count on to increase their payments every year. You don't just drop a 25-plus year record of dividend increases, and these companies are going to do everything possible to keep boosting those payments. So for example, if you had bought 500 shares of Realty Income, ticker O, in 2014, at first you would have collected $88 a month in dividends, but fast forward to this year, and because the dividend has grown 45% over the last decade, you'd now be making $128 a month, and all while your investment would have doubled in value. That is the power of these constant and consistent dividend increases. I'm going to show you how to use that, reinvesting your dividends and investing regularly to grow your cash flow. Now understand also though, most of the Dividend Aristocrats make their payments on a quarterly basis. In fact, of the 5 I'll highlight today, only Realty Income is a monthly payer, but with the 4 payments a year from the other 4 plus our monthly stock, you're going to be getting monthly cash flow. I'll show you the full list and how that dividend stream grows with different levels of investment at the end of this video. And here our only monthly dividend stock in the portfolio is that Realty Income, ticker O, and its 5.9% yield. Realty Income makes a lot of these lists, and it's easy to see why. Besides that monthly dividend and the history of increasing the payout, it's also a reliable part of the real estate theme. Realty Income owns that kind of freestanding retail properties that are relatively immune from the e-commerce trend. Things like grocery and convenience stores, drugstores, and home improvement. Real estate stocks holding those kind of properties fell just 6% in 2022 and 8% last year, but have been saved from the worst of the sell-off. The company's long-term leases and historical 98% occupancy means stable cash flows even during recessions, all of which that drive that history of dividend increases. And investors love the 122 monthly dividend increases, making it the only real estate trust in the Dividend Aristocrats, and the company has boosted that payout by over 17% in the last 5 years. That's the second highest dividend growth on our list. Because it does pay a slightly lower yield, we're still only putting about 15% of the portfolio in this one, buying 47 shares for that initial $12 a month in dividends, but you're going to start to see that grow fast and contributing more to that overall cash flow. Now you will notice in this list that I'm not investing across all the Dividend Aristocrats or even the highest yielding. For example, shares of Leggett & Platt pay a very tempting 10% dividend, but the price has plunged over the last year. Besides destroying portfolio value, that dividend payment may not be entirely safe, so it's not something you want to rely on for that cash flow. For this list, I researched the 10 highest yielding Dividend Aristocrats to pick out the best 5 with a combination of good dividend growth, price performance, and that outlook for safety. Maybe the most important part of the plan, though, is I'm not investing evenly across all 5 stocks. By weighting the stocks with higher dividend yields with more of that initial investment, I'm going to boost the average dividend yield on the portfolio past 7.2%, and I'm just going to collect more cash. I'll detail exactly how much to invest in each stock to grow the portfolio to $1,000 in dividends each month towards the end of the video. We're coming up on the spinoff of 3M's healthcare business, which could be a great catalyst for the stock, and its 5.9% dividend. 3M is one of the last big conglomerates out there, spinning off its businesses with 4 segments, from industrial products, which is about a third of total sales, to electronics, healthcare, which is about 24% of sales, and consumer products. While the company has increased the dividend for 64 straight years, it's only been at a rate of about 2% annually over the last 5. But 3M has already filed to spin off its healthcare business in tax-free shares to investors that could happen as soon as April. If you own shares of 3M, you're going to get shares of this new company, Solventum, as well. We've seen other conglomerates like General Electric spin off their segments over the last few years and see the shares jump as they unlock that value. And the same thing could happen to 3M. Even if it takes a while, the shares are trading very cheaply here, and the fundamental business case for the company is still good. You're going to earn that nearly 6% dividend while you wait for the shares to head higher. We've highlighted 3M a few times over the last few months. I think this is a good opportunity to get in before that catalyst in the spinoff, and there's a lot of value locked in these shares. The plan here would still be to buy only 16 shares, about 10% of our initial investment in the 5 stocks because of that lower dividend growth though. But that would still equal $96 a year, or about $8 a month in the dividend income. And Nation, you know I love dividend stocks, but everyone needs a little growth in their portfolio. So if you want to see the stocks I'm buying for the next 10x returns, the stocks I'm buying for the next 30 years, look for the link I'll leave in the description below. It's a free report I put together with the Motley Fool, some of the biggest stocks in my portfolio. These are the stocks I'm following in major multi-year themes, with one of the picks up 100% and the group up an average 94% just last year alone. That report is totally free. You're going to see the first stock immediately, and they'll email you the full report with the other stocks. It's an easy way to support the Let's Talk Money community and see some of my favorite stocks to buy. So look for that link, or just scan the QR code here. Universal Corporation, ticker UVV, isn't a company you hear about often, but is a powerhouse with a 6.3% dividend yield. Universal is a leading supplier of leaf tobacco, producing nearly 2/3 of all tobacco outside of China, with business in 30 countries. Diversifying from the industry, though, it's also started to build out that plant-based ingredients platform with acquisitions of Fruit Smart and Silva in 2020 and Shank Extracts in 2021. That tobacco leaf segment produces those stable cash flows that are being used to add in that plant-based segment to produce growth for the company. Universal has grown the dividend for 50 consecutive years, growing it by 6.7% over the past 5. That's going to make it the second largest position in our dividend plan, buying 80 shares for $264 in annual dividends, or about $22 a month. We've still got our highest paying Dividend Aristocrat, plus that full list and plan, but the only thing better than cash flow every month is dividends every single week. I put together a portfolio of just 12 dividend stocks that do just that, pay you every single week. Check it out here, or I'll link to it at the end of this video. Our last dividend stock before the full list and plan is Altria Group, ticker MO, with its 9% dividend yield. I know you might not want a tobacco stock in your portfolio. That's fine. There are other high-yield stocks out there that we've highlighted, like Gladstone Commercial, ticker GOOD, with its nearly 10% dividend yield that could act as a substitute here. It's just hard to overlook that 9% dividend yield and the 22% dividend growth over the last 5 years you get with Altria. And even as people shift away from cigarettes, nicotine demand has remained consistent and growing about 1% a year. Altria has stayed ahead of this by transitioning into products into smoke-free and has been able to increase its market share against competitors. Altria has increased its dividend for 54 consecutive years, again growing it by 22% over the last 5 years. So not only is that high yield, but also the strongest cash flow growth in our list. And that's why it is the largest in our portfolio, buying 143 shares to start and adding $600 in dividends a year, or $50 a month. It's half of that initial $100 a month cash flow. So if you're going to substitute another stock in here, make sure it's one with a high yield, but also strong dividend growth. Here's that full list and the plan for building that monthly dividend cash flow from these 5 stocks. I'm going to walk you through this, but understand it's all based on how much you invest in each, the dividend growth of each stock, and then reinvesting those dividends. That initial investment that got us to $100 a month in dividends came to just over $16,500 and was 10% in Northwest Natural, 15% in Realty Income, 10% in 3M, 25% in Universal Corporation, and 40% in Altria. I broke it down that way to maximize the dividend yield and growth. We get the high dividend growth in Realty Income and Altria, but you can adjust your own portfolio and add in other stocks as well. The 5 stocks together, that breakdown yields to 7.2% dividend, which is very high, more than 5 times the market average. So it's exactly the kind of thing that you want in your cash flow portfolio. Investing another $150 a month over 5 years doubles your income to over $200 a month, and stretching it a little to $300 a month is going to get you over $300 a month in dividends. Now, I know, who wants to invest $300 a month for 5 years when people are buying AI stocks like Nvidia and tripling their portfolio in a year? Understand, folks, dividend stocks aren't going to grow like those riskier growth stocks, but they are a lot safer, and you will be better off. Invest just modest amounts each month, or whatever you can afford. Build your portfolio, and you're going to be able to count on that cash flow every single month. When you think about it, it is really amazing though. Just 5 years of investing, and you could have a $300 stream of income for life. Take this a step further though. Investing just $150 a month for 10 years, and you'll double it to almost $600 a month in dividends, and really stretch. Commit yourself to investing that $500 a month for just 10 years. You could reach that $1,000 a month in dividends. It might not pay all the bills, but it's only 10 years. And what could you do with an extra $1,000 a month? Get your free report and see the growth stocks I'm buying for the next 30 years. My forever stocks up an average 94% last year alone. Or click on the video to the right to see that dividend portfolio for cash flow every single week. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.